Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Thursday. In today's program, I want to talk about the recent OPEC Plus announcement and decision and the impact that is having on the market in concerns with inflation, plus some latest developments from the UK, which could affect the sterling in the medium to long term. But before we get into all of that, do not forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, as you know, yesterday, OPEC Plus met for the first time in person since 2020 to discuss oil production, oil output. And they made a decision to cut oil production by 2 million barrels. 2 million barrels, because they were worried about the fact that oil prices have fallen dramatically over the last couple of months. Now, oil currently hovers near a 3-week high. Okay. And yes, that 2 million production, 2 million cut of barrels per day will most likely be around 860 to 1 million barrels. It's still very much spooking the market because, for one, this is adding to the concerns that inflation is going to continue to remain high. And this is going to put further strain on, obviously, countries in Europe and the UK and people like this trying to survive the winter. Because don't forget, they've already got a massive energy crisis with the lack of gas coming from Russia. So they're obviously we're going to look towards oil. But now with supply being cut and prices likely to rise even further, this is putting more pressure on the market and scaring the market even more. And another thing, this is a big slap in the face to the US. Because don't forget, KSA and the US are supposed to have some sort of special relationship. And they have done for a very long time. And don't forget, in the summer, Joe Biden went over to Saudi Arabia to try and convince them to increase production to bring down prices. They agreed to increase production, but only by 100,000 barrels per day. So this cut of 2 million is a real slap in the face of the US. In fact, the administration of the US president has criticized the deal as being short-sighted. Cap that and put this together with the European oil price cap they're going to try to implement on Russia. There is real serious concerns now that oil will keep getting higher, going higher in price, and keep inflation at record levels. But the question is, how high can actual oil go? And we'll have a look at oil in a minute. Goldman Sachs now predicts oil to go to about $110 a barrel by the end of quarter 4, which is great news for us drivers. And ING, they predict Brent to go above $100 a barrel in quarter 4. The only bank who says this could backfire and be negative for oil prices is Citibank, who says this deal will downgrade it. Well, actually, will not downgrade it, will backfire because of high oil prices will affect demand and eventually bring down prices. But let's have a quick look at oil as it stands at the moment. So here we go. Like I say, on the back of that announcement, we are seeing slightly higher oil prices. Currently trading at the moment $87.19 a barrel. And if we look at on a weekly chart, as you can see, we are indeed trading at a 3-week high. A 3-week high with oil. So obviously the next challenge for it realistically is $98.16. That's the area I'm keeping an eye on with oil prices there. Brent is a very similar story as well, obviously. So yeah, $92.97, again, trading at a 3-week week high. So again, OPEC has just decided to really add to the market's stress and market's pressure. And like I say, we're not even in winter yet. Well, we're coming up to winter, obviously, in October now. So this is really adding to the concerns. In other news, Fitch, it's a credit rating agency, has actually downgraded UK's credit rating from stable to negative. Again, this was down to the mini budget proposal, another organization criticizing the UK's government and UK's recent proposal. In fact, and this is actually a frightening number, the UK markets, and this is really obviously how good a leader she is, or how much confidence she's put in the market, but the UK markets has lost 300 billion sterling in trusts first month in the top job. First month in the top job. So though sterling is stable, and we'll look at it in a moment, is stable at the moment. There is a lot of people expecting, a lot of analysts expecting the sterling to come under more pressure. In fact, Reuters did a recent poll to forecast, and they did in this poll forecast further British pound US dollar weakness. In fact, the majority of the poll reckons that the sterling can fall to 1.09 in a month and then 1.10 in 6 months. But it did predict in this poll that it could recover in a year's time to 1.116. But other analysts are even more damning on it. Wells Fargo in particular. They said this, and I'll quote them: "We expect further significant weakness in the pound, with the UK still seeing falling into recession and CPI inflation expected to peak lower than previous." They also went on to say, "We expect the BOE rate hikes to fall well short of the Fed." In other words, what they're saying is the Fed can do a lot more than the Bank of England can, and they are right about that, because the Fed has obviously a pretty stable job market at the moment. However, the UK is a different kettle of fish, is a different story at the moment. In this poll as well, the question was asked, could the British pound go to parity with the US dollar? And 17 analysts said a very high chance of that. In fact, Jordan Rochester, who is an analyst I watch a lot, and I like this guy. He's very, very, very smart, of Norma. He predicts the British pound to fall to 0.9750 by December. So let's have a quick look at the sterling now and see how it's performing at the moment. Like I say, if we go on 30 minutes, we can see a really good range. At the moment, it's currently trading at 1.1293. It's in a really good range at the moment. And it's a very big range yesterday, where there's a potential resistance I can potentially see at 1.1464, and support, as we can see, it tested it yesterday at 1.1236. So at the moment, it's very much range bound, which I'm expecting the market to be majority range bound at the moment, to be open with you, because I'm expecting it to wait for tomorrow's big US job data. While we're at it, let's have a quick look at the euro as well. Euro, like I say, it's trading just above that key area of interest, 0.9870, currently trading at 0.9881. So yes, that's the story of the day. You know, with the Fitch downgrading, and obviously OPEC scaring the markets again. It just seems like we can't get a break at the moment. Don't forget, we've got some major events coming up this week as well. Today in particular, we have EU retail sales, German retail sales, but the big one tomorrow is US unemployment rate and US non-farm payroll. Oh, I have a question. Let's have a quick look. Hey, James, how is gold doing? That's a very good question, because obviously those who watch this video on a regular basis know that I'm a gold bug. And let's have a quick look at gold, because there was a very interesting battle going on with gold yesterday. Let's pull it up on my chart. We can have a look at it. Very interesting battle, because don't forget, yesterday we did see a little bit of dollar strength again in the market. As I was saying, the market was sort of waking up that the chance of the Fed doing a pivot was looking even more and more unlikely. However, I did point out the first test for gold and for the bulls to keep in the fight was $1,700 level. And the bulls managed to win at that time. It's managed to keep it above the 1700, the psychological level currently. It's currently trading at $1,715.63, but it cannot break for the time being that key level, which I've been watching for a long time, $1,726. Again, I am expecting this, unless we get any real big developments in the market, to be fairly range bound today. Like I say, like most of the markets, because I think it'll be waiting really for that key job data due tomorrow. But a very good question. Thank you for that. And thank you for reminding me, because I am indeed a gold bug. What other events are coming up? Like I say, the NFP tomorrow is the big event. And I will be doing a watch along for that event, because like I say, it's all about the job data. If we get a really impressive figure, again, a really impressive number, then that really does crush any hope of the Fed doing a pivot, which I don't think they're going to do anyway. If we get a weak number, then of course the market may look at it and go, they'll do a pivot. I don't think they will, but the market will start to believe that again. So do bear that in mind. What else is coming up? Oh, yes, today we've got the next episode of Tixee Live Presents #Ask James. Now, don't forget, this series is a bit different for Tixee Live. It's not so market driven. Instead, it's educational driven. The idea is you send in a topic of your choice, and we'll dedicate a whole live broadcast just to cover that subject. Now, it's due today at 12:30 p.m. UTC, and today's topic is chart patterns and pivot points. This has been sent in by viewer Skyweaver57. So big thank you to this individual for this topic. So please come and join me. Remember, that's at 12:30 p.m. UTC today, and the topic is chart patterns and pivot points. So please come and join me for that. The market, as it currently stands at the moment, FTSE in the green slightly, despite that downgrade, 0.04%. DAX currently in the green, 0.37%. Eurostock 50 currently trading slightly higher as well, 0.44%. Don't forget, like this individual did, thank you very much for that. You can ask me questions anytime you wish, or just simply say hello if you like, or share me your opinions. What do you think about this OPEC deal? Do you think, can you see oil returning to sort of record levels? It was not quite record levels, but the levels it was holding back in March and April. Or, will it backfire like Citibank predicts? What do you think about the NFP number tomorrow? Are we going to get a good reading again, or is it going to disappoint? Or what do you think about the sterling? Do you see it going below parity? I mean, like I say, the sterling at the moment's got a little bit of a boost since they did a U-turn on these tax cuts. So like I said, the question of parity, like last week, everybody was predicting it to go to parity. Now it seems to be a little bit waning, that sort of vision. But you never know. Like I said, I can still personally, in my opinion, I can still see the sterling under a lot of pressure in the future. It's definitely, I think that 1.09 handle is a potential in the long term, potentially. Don't forget, if you think of a question later, you can put it in the comment section, either on YouTube or Facebook. I will see them and I will reply to them next time I'm online. And then don't forget, of course, that would be at 12:30 p.m. UTC for #AskJames. But I'll also be back on again at 2 p.m. UTC to cover the US session. So please come and join me for that. Okie doke. If there is no questions, not a problem. Not a problem. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, found it interesting and useful, and you put up with me, my over-the-top enthusiasm for the markets, which I simply just cannot help, then give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are risks at hand before entering any trade. Till next time, every single one of you, trade safe.